Good morning to everyone in LatAm watching us today, and good afternoon those in the UK. Welcome to the final panel discussion in this year's LATEC, the Latin American Technology Forum and Exhibition. We're very glad to see you again and continue the conversation that started last year. Right now, we are very glad to have you back in this stage for this final panel discussion with our experts, panelists from the leading law firms in Argentina, Colombia, and Mexico that will be discussing the potential impact of regulation on fintech companies in Latin America, and obviously the connection with the UK. So we have from Argentina, we have Maria Shakespeare and Daniel Levy from Becar Varela. From Colombia, we have Lina Lineros of Pose Herrera y Ruiz. And last but not least, we have from Mexico, my dear partner, Adrian Lopez from Nader Ayo y Gebel. So without further ado, I will just start the conversation. So we will have questions, and our panelists will start to cover them by country, starting by Argentina, then Colombia, and then Mexico. So we'll just kick off with a general overview on what is the regulatory outlook, development updates in the fintech industry. So please, Daniel, Maria, I think Daniel, you will go first.
Well, thank you, Yves, for the introduction. Thank you, everybody, for being here at the event. Just as a brief note of the regulatory landscape on fintech in Argentina, in the last year, we've seen an increase in regulation in certain segments, mainly those that had a lot of increase in business due to the pandemic, significantly in areas like payments on one side and lending too. On the payment sector, the central bank, which is the main supervisory authority in Argentina for these aspects, have started and increased certain regulations on payment service providers, mainly those that offer payment accounts. In practice, this means basically those payment service providers that offer you wallets or prepaid cards, with certain regulations regarding requirement for getting certain registration and complying with certain laws regarding management of funds of their users, etc. Then on the lending sector, in Argentina, a company can lend with its own funds without needing a banking license. So there is a lot of activity by fintechs there. And the central bank in the last year also increased the regulation for the sector, requiring a registry also for these companies and imposing certain requirements regarding transparency of the interest rates and so on. And as a third topic that can be mentioned from last year, the central bank also regulated a new framework for instant payments, which is called Transfer 3.0, which is a very interesting framework because it tries to interconnect instant payments between bank accounts and non-banking payment accounts, fostering competition, interoperability, and cooperation between banks and fintechs. So that can be in some the main aspects that have been, touched by regulation last year in Argentina.
Thank you, Daniel. Then let's go now to Colombia, and Lynn, if you can help us now
And thank you, everyone. Well, actually,
give us an update.
Financial technology regulations. Even though in Colombia we still don't have like a particular fintech regulation, and we see that the authorities are not aiming to have this particular regulation. Within the last year, we have different laws regulating topics as, for example, low-value deposits. In Colombia, we used to have two different type of low-value accounts. Now the regulation merged those two type of accounts in one single account. Mainly, these accounts are digital and electronic bank accounts with a limit of maximum balance amount, where clients only required to have an ID to open this account, and also all the onboarding process should not be on site, can be in the website of the financial institutions. What we see is that this regulation meets all the efforts of the government to increase the financial inclusion in Colombia. By the other hand, we have the regulatory sandbox regulation. This regulation aims to permit companies that do not meet all the regulatory requirements to apply for a financial license in Colombia, to apply to a temporary license, a 2-year license, when these companies evidence to the financial regulator that they have a technology innovative project that permits financial inclusion. This means that fintechs or companies that have not a strong operation in Colombia can apply to this license with a waiver within these 2 years, launch their products, and by the end of this time, they will need to meet the regulatory requirements, and if they don't, they need to run off the business. And maybe finally, we have some regulations trying to bring standards to the relationships between the financial institutions and all the technology providers. We have, for example, the digital correspondent regulation, which gives standards to those companies that offer financial products in their platforms or websites, and that are online connected with the financial institutions. And also we have regulations regarding the software as a service. This means standards for fintechs that are providing technology solutions to the financial institutions. I think that this is like the general landscape in Colombia for the last year.
Thank you, Lina. Now it's your turn, Adrian. Can you wrap up the overview of the region with Mexico's update, please?
Certainly. Thank you, and thank you to my colleagues, and good evening and morning, respectively, to everyone. In Mexico, 2020 and so far, what we have transferred in 2021, we have continued to develop all the regulations that are ancillary to the fintech law that was enacted back in 2018. I think that the Mexican market exploded due to, of course, that regulation, the appetite of investors and other players, but also because of the pandemic. The pandemic accelerated the use of electronic means of payment in Mexico dramatically. And there are a number of new players in the market. I think that one very important change that we observe in Mexico is the position of the financial regulators with respect to fintech services. The first authorizations granted under the fintech law have been granted through the last year and the first months of this year. And with respect to payment companies and also fraud funds. And we have seen that, developments with respect to the regulations, the secondary regulations with respect to open banking. As you know, very briefly, the Mexican financial institutions have the obligation to set up APIs to give API services and let competitors access certain data with or without the consent of the relevant clients. That's a big development. And another perhaps big one was, and it is not domestic, was the position of the SEC and other federal U.S. regulators with respect to cryptocurrency. The fact that national associations in the U.S. can purchase and sell cryptocurrency is a big development, and it can have a much deeper impact worldwide, of course, if Her Majesty's Treasury adopts a position similar to the one that has adopted the federal U.S. regulators and also the other regulators around the world to allow the trade of cryptocurrencies by certain financial entities with certain restrictions, which is not the case in Mexico, and there are no changes in the crypto arena for 2021. And also, the stance of regulators with respect to surveillance has been a little bit more harsh with respect to publicity in Mexico, financial services and securities offerings, and also by in connection with the offering of banking as a service and fintech as a service. I think that pretty much is a summary.
Thank you, Adrian. And basically, I think you open up kind of the follow-up question that I would like to ask them for the audience. What about cryptocurrency? What is you already mentioned what is going on in Mexico, but what about the cryptocurrency in Argentina, Maria?
Thank you, Yves. Well, actually, it's a very hot topic these days. Crypto, I believe, worldwide. If you have a look at the newspapers, if you take a cab, everybody's talking about crypto these days, isn't there? It's why? Why is everybody talking about crypto these days? Well, people say one of the reasons is because crypto is high. It's a good investment. It's still seen as a good investment, even if it went down and up and it's volatile and it's risky. All in all, as a trend, it's still considered a good investment. Also, it involves a relevant volume of value. It is said that it's around Bitcoins alone stand for like $700 billion business. So everybody is attracted by crypto. Everybody's willing to make business with crypto-related businesses. It has good press, it has bad press in many aspects that we can then discuss. And there's also something around crypto in general, I think, which is like the romantic side or the epic side of the story. And it has to do with crypto fans or crypto lovers. They make crypto a way of living. Crypto fans are persuasive, are passionate about it. If you look at the tweets where discussions on crypto take place, they are very attractive, interesting, and many crypto protectors, just to call them somehow, are anarchic in nature. They really challenge the established monetary system, and that's, of course, something very interesting in every crypto discussion. So just going directly to Argentina, in Argentina at this point, there's a boom on crypto businesses. There's a lot of innovative, interesting, very profitable businesses around crypto. And this is mainly because we had our share of a crisis. We have inflation and foreign exchange restrictions, and all that make very attractive for Argentines to invest or to purchase cryptocurrencies, just as a way of protecting value. At least for that reason, it's very important in Argentina. And of course, as my friends here from the region were saying, in Argentina, cryptocurrencies are not regulated. There's not a particular set of rules that have been issued to regulate crypto. Of course, as in most every jurisdiction, you usually look at central bank regulations, stock exchange regulations, AML regulations, and tax regulations, just to check whether cryptocurrencies could have an impact, or if those regulations could have an impact on cryptocurrencies. So just going very quickly over those set of regulations, in general terms, our central bank has established that cryptocurrencies are not a legal currency. It's not mandatory to accept them because it's not issued by the government. The central bank said this in like a press release. It's like an informal way of communicating. And of course, there have been a number of press releases or comments on this. But in a nutshell, what the central bank said is this is not a legal currency, and this is risky, this is volatile. In a way, if you fall, I won't catch you. So that's what the central bank said. But just last Friday, what they issued is also like a communication where they mentioned they were commencing investigations against some fintechs that were involved in the financing of different projects with cryptocurrencies. So we really don't know at this point what these investigations will lead to, but what the review will go around checking whether these fintechs are performing financial intermediation, which is reserved for financial banks only, for banks only, sorry. Well, then our stock exchange said something very similar. I don't want to take all the time, but in general terms, what the stock exchange said in the last press release is that cryptocurrencies are not securities. So in principle, they do not find a reason to participate or to find crypto as part of the stock exchange regulations. Then AML also has some mostly informative or reporting obligations on the obliged subjects, and then the tax authorities also decided to tax with income tax the gains that have cryptocurrencies as an origin, the exchange of cryptocurrencies as an origin. And there are, of course, bills of law around. So the expectation is that there will be some kind of regulation, but as of today, this is all we have. So the lack of regulation, or the very small part of regulations, have fostered the flourishing of many crypto businesses and made that kind of fintechs very relevant in the industry. So with that, I think we lost Yves. I can see him, but maybe I can pass the microphone
I'm
to...
here, okay. Maria.
Yes, if you can pass it.
I'm here, yes. Up to you, to see what's the position in Colombia. And one point in this regard will be on one question to take into account, Lynn, and it's the position in Argentina is clear. give us an idea how things are in Colombia, and obviously Adrian will clarify in Mexico, but what is important will be to take into account the regulation, the effects, and also my question to all is, the regulatory regime is preventing this business from happening. What is the effect of not having a proper regulation in the business itself? As we all know, El Salvador is acquiring cryptocurrency as their legal tender currency, which is kind of the other extreme. But let's see how it goes. So, Lina, your turn.
Thanks, Yves. I think Colombia is in the middle from Honduras and Argentina. The central bank is very clear that crypto assets and cryptocurrency are not a legal currency in Colombia, also are not securities, but it is permitted to purchase this kind of assets in Colombia. The only restriction that we currently have in the regulation is that financial institutions are not allowed to purchase crypto assets, cryptocurrencies, but all the other public in Colombia is allowed to purchase. Maybe the concepts of the central bank try to make aware the Colombians of the risk of this business or this type of purchase of crypto assets. But basically, what happened in Colombia is that a lot of cryptocurrency platforms were aiming to come to Colombia and have trading in Colombia. But the first limit that they found was that the financial institutions were not did not open bank accounts to these digital platforms. So recently, the financial regulator in Colombia starts a sandbox for partnerships between cryptocurrency digital platforms and traditional banks in Colombia. So we have around eight partnerships of cryptocurrency platforms and traditional banks that are beginning to have cash in and cash out transactions in Colombia. Of course, I mean, the first risk that we were looking for was the AML risk of this business. In Colombia, all AML risks traditional banks have very strong policies of AML. So this regulatory sandbox is trying to bring some standards to new standards to the traditional banks, so they can open and play and have partnerships with cryptocurrency players in a safe scenario. I think that's the landscape here in Colombia.
Adrian, can you hear me?
Yeah, no, we can.
Adrian, you can hear me. Okay, up to you, and I'll just take advantage of this opportunity. There has been some comments by Lubin Reyes and Esteban Guarin. Lubin has been making some comments, and I'll just kind of pass them to you if there's anything you want to address in that regard. So his comments are that the volatility away from Bitcoins and is the new settlement process, and USDT is a major player as a settlement tool. So if you have any comments in that regard. And then Francisco is asking a question about the Argentinian Central Bank position regarding cryptocurrencies, and the one you referred to, Maria, of last week. And the question is whether there has been privacy or confidentiality or GDPR rules being broken or breaches, therefore, by the central bank by issuing that information about the cryptocurrency. So, Adrian, if you want to go ahead, and then we'll just close the circle with these questions. Thank you.
Certainly, and I think that similarly to Colombia and Argentina and Mexico, the biggest concern in connection with cryptocurrencies is certainly the AML analysis of the transactions. Early on, and that's one aspect, and the other one is, of course, the volatility and no cryptocurrency is backed with the full faith and credit of any sovereign or private entity. So they are pretty much not backed. It's not fiduciary money as we understand it as we understand fiat currency nowadays. So that's a huge difference, and it makes it a very, very special animal to regulate. Because other than a few stable coins that are backed by certain assets or other tokens, cryptos, are only an algorithm. No, in Mexico, it has been difficult to implement a domestic crypto exchange because of the anti-money laundering compliance, and also because the central bank, in the interbank payment system rules, established very harsh, a very harsh enhanced MAL analysis for depository institutions that were serving exchanges or customers that were transferring funds derived from the operation of cryptos. So that makes it very hard for a Mexican company to operate an exchange in Mexico. That being said, Mexico is a big market. It's a big crypto market. But it operates on a cross-border basis, and that was something that many players in the sector commented or indicated to the central bank when the central bank was building the crypto regulation, much in the way in which Her Majesty's Treasury is doing right now. And what Banco de Mexico ruled, and at least there's a general consensus that they are right to a great extent, is that it has to be what they call a safe distance between the public and the crypto assets, and they call it a safe distance because the sophistication of the public at large in Mexico, the financial education that they may have to acquire this kind of assets is not the same that you would have in other jurisdictions, and you may be exposing a large part of the public to a risk that they are not prepared to bear. That's the reason why the central bank decided that financial institutions may not trade with cryptos, but they allow financial institutions, especially banks and fintechs, to use cryptocurrency to carry out what they call internal operations. If they are operating or transacting using a cryptocurrency or a blockchain, especially in the remittances arena, then the central bank may issue a special authorization for that financial institution to do so. But for that matter, of course, the financial institution would have to disclose how the crypto runs from a technical standpoint, if there's a market, if there's some active market with respect to that, what has been the volatility with respect to that particular asset, etc. So in short, in Mexico, yeah, you do have a market, you have a crypto, a very well developed and very deep crypto market. It operates mostly on a cross-border basis. It is possible, it is legally possible to set up an exchange. It is legally possible to provide depository services and transfer services in Mexico. But the big challenge is the AML compliance. And, since it is legal and it is permitted for financial institutions on a restricted basis, you have a huge opportunity, and this is something that other players have been exploring, a big opportunity to set up a system taking advantage of the ability of federal U.S. banks to redeem, quote unquote, crypto assets in order to operate transfers. And if other jurisdictions were to regulate cryptocurrencies in a similar fashion, then that possibility would be of course broader. I think we lost you.
Thank you, Adrian.
Oh, okay.
No, thank you, Adrian. Maria, do you have any response to the question from Francisco on the GDPR potential breach?
Yes, sure. And indeed, it's a very, very good comment regarding the press, the communication of the central bank that I mentioned from last Friday. The central bank did not disclose the name of the companies that were going to be investigated, but indeed there was some kind of a gathering of information by the central bank, and apparently the central bank requested information to different banks and participants of the financial system on different fintechs and crypto businesses. And there was a class action trying to protect the information that gathered in this form that was dismissed, didn't evolve, but mostly because of some procedural reasons. So there is a lot of discussions regarding that. I mean, it's also a very relevant issue to consider data protection regarding these kind of investigations and gathering of information of these services, mainly because they are not regulated. There's nothing in particular, but these kind of questions and challenges are being presented. And also regarding Lubin's question on stable coins, as I mentioned at the beginning, it's exactly like that. No? In Argentina, due to the foreign exchange restrictions, stable coins are really attractive and are being used widely.
Thank you so much. Well, we're running out of time, and this has taken a lot of time, but we have a lot of subjects we wanted to talk about. Why don't we basically try to address briefly the subject of the big tech and the alliances between companies and financial institutions and open banking as a whole. So please try to be brief and let's try to cover that question. I think it's quite important. So Daniel, your turn now.
Okay, yes. Well, regarding open banking, worldwide there are like 3 different approaches regarding, the opening of financial information to the market. There are countries that adopted a regulated approach, like in Mexico, for instance. Other countries adopted a voluntary approach. Argentina has so far adopted more a market-oriented approach. The regulator has not been so active in open banking. It preferred more to let the players, work freely, and so in that regard, we have seen recently several agreements, joint ventures between certain banks that wanted to voluntarily open certain information to fintech participants, and also regarding, as I said earlier, regarding instant payments. The central bank adopted there some kind of open banking principles, the obligation of banks to open and to develop APIs to be easily accessible for any fintechs. So, and we have certain bill of law trying to amend our data protection law in order to insert certain portability rights and trying to change certain, legal restrictions that may, in a sense, prevent the open banking to evolve efficiently in the country.
Thank you. Thank you, Daniel. Lina, your turn on Colombia.
Thank you. Well, actually, in Colombia, as Daniel was saying, the Unit of Financial Regulations on December of 2020 proposed to have a voluntary regulation of open banking that is expected to take effect in 2022. This means that our own open banking model should be structured from workshops between the authorities and the members of the industry. This means fintechs, financial traditional institutions, and so on. Basically, the key points of this model are to have open architecture to all the financial products, but beginning with saving accounts and loans, and allow non-financial third parties to provide technology to what they call non-sophisticated institutions to incorporate new technology in the financial system. The Unit of Financial Regulations has been clear that this model has not to be adopted by all the bank institutions in Colombia, because some of them are not in the position to comply with all the technology requirements that these regulations will bring. And maybe I would point out that this regulation, that open banking in Colombia will not include the financial portability regulations. However, this Unit of Financial Regulations has stated that they are aiming to have a different regulation to permit financial portability in Colombia. So by the moment, there have been like 2 workshops between authorities and members, and we expect that by the end of this year we have more visibility of what this model will have in Colombia.
Great, so much. Dear Adi, your turn, basically running out of time. So,
thank you. Very briefly, I think that since 2018, Mexican financial institutions have this obligation, these statutory obligations to set up APIs to share 3 kinds of data. What they call, common data, which is pretty much where the ATMs are, which are very lightly regulated. That's and they share it normally. What the law calls the aggregated data, which is all the transactional information of that particular financial entity, but without on an anonymous basis, and the transactional information, which is the transactional information of each client, and which of course requires the prior consent of each of the clients of the financial institutions. Now, we have regulations in place that provide for the sharing of aggregated data, but we don't have any regulations governing the sharing of transactional data. Those are to come allegedly this year. Sometime soon. And financial institutions will have to implement them. And it's noteworthy that not the same rules apply to all financial institutions. Banks and depository institutions, which are regulated by the Banking Commission, have one set of rules. But for instance, retirement funds, pension funds will be regulated by the Pension Fund Authority, and so forth. So, that's what we have in terms of open banking. And, from a regulatory standpoint, and very generally, in consideration for the time, I think that there is no real there is no real restriction for a big data company to use data in Mexico to market financial services. That's one. And there's no restriction to do so. I mean, there's a very heated debate in the US at a congressional level if big data companies that, the usual suspects, which are trillion-dollar companies, should be allowed to engage in the financial market or provide financial services. That would deeply disrupt the financial market, no doubt. It hasn't happened, and at least in Mexico, it hasn't happened for no good reason, because it is not restricted. But I'm going to leave it there and see if we have any questions or any other items that we want to address here.
Thank you. I mean, I understand we run out of time now, and I want to thank everyone for attending this session. In particular, I want to thank the Colombian Chamber of Commerce, the Argentinian Chamber of Commerce, and the Mexican Chamber of Commerce in the UK for organizing this event. Tata and Elisa, all the hard work that is behind this. Obviously, all the panelists in this session and in all the sessions throughout the date, and bringing these, wise advice, sharing what they know. I think there's so many things going on at the same time. Latin America, Argentina, Colombia, and Mexico have so many opportunities to offer to UK businesses, mainly in tech-related matters. This was a very brief overview of the regulation, cryptocurrency, open banking, and potential alliance between big tech and financial institutions. Now you know where to find Maria and Daniel from Becar Varela in Argentina, Lina from Pose Herrera in Colombia, and Adrian from in Mexico. So you have their contact details. Please contact them directly if you have any questions or you're interested in learning more about the opportunities and challenges in the region. Thank you so much. Have a lovely evening. Enjoy the nice weather, the day, and look forward to continue the conversation. Thank you all.
Thank you, everyone.
Thank you.
Thank you.
Thanks. Have a nice